A wonderful good morning, ladies and gentlemen, and welcome to NAGA and Markets for Breakfast. My name is Alex Duvidari, and today is November the 8th, 2019. It is a Friday, and ladies and gentlemen, what we're seeing on the markets here is somewhat crazy, and I want to summarize that and give a little bit of an outlook of what I believe are things we should definitely pay attention to over the course of what is actually, it's history in the making, if you ask me. Those are very, very special days. So, what we see is that yesterday the S&P 500 first went higher and higher, and now it's actually coming back overnight, and we saw a new all-time high here. And obviously Donald Trump wouldn't be Donald Trump if we had not hear him say, where is he, our best buddy, stock market up big today, a new record, enjoy. So all right, so who's actually enjoying that? And shouldn't we be worried about this kind of one-sided view of everything? Personally, I believe we should. So we saw yesterday another all-time high in the S&P 500, which is coming back now. Now, what is the situation here? No, first of all, there is, or there was maybe more positivity, optimism in the market that the U.S. was willing to roll back on tariffs for China, because that is definitely what China is demanding. So here we have Hu Jin, who made it clear the attitude of the Chinese side is clear, that the two sides must simultaneously, proportionally remove the existing additional tariffs in order to reach phase one deal. So proportionally, I think, is the big buzzword here, because the US have added a lot more tariffs than the Chinese did. So let's see if that is actually something that can happen. And Hu Jin adds, this is also a realistic way to de-escalate the trade war. Hope it also is the attitude of the US side. Now, something I also want to touch on is that really, why do these algos go up? Here, you know why algos buy unsubstantiated headlines? Because they are stupid. And that's actually what we're seeing. We see they are buying up these headlines like crazy without looking at really how substantiated they are. And here, and that is the reality of where we are right now. An agreement to roll back China tariffs as part of a phase one trade deal faces fierce opposition in the White House. And I got a couple more tweets here. So, Life Squawk is tweeting here, White House plan to roll back China, what I just said, faces fierce internal opposition. No final decision has been made yet. Even further, whoops, White House sources say plan to roll back tariffs faces opposition. What a bummer, right? Trump and Xi, we want stocks and yuan up. Navarro, I have different plans. That's a little bit of a funny thing, but that's really how you got to picture it. Navarro is an extreme China opposition, and I don't think he will do it, right? And so will Trump have to fire Navarro over that? I'm not sure he will do it. And here we have Edward Lawrence from Fox Business saying that Chinese trade sources, China wants all tariffs rolled back as phases of the trade deals are completed. Those sources say the US offered to roll back some tariffs, but want to keep majority in place until the Chinese reach certain milestone after the full trade deal is completed. So you can see the two sides are very much apart. They are not even close, right? And that is definitely something that we should consider here. And on top of that, see how the stock markets reacted. Stocks suddenly drop on reports, fears internal opposition. So boom, the algos buy up the unsubstantiated headlines, and then boom, we go down again on the new news, the negative news. And something that is a little bit crazy, and I think it also ties into, if the president is saying stock market up big today, a new record, enjoy. Like, what is that supportive of? In my eyes, it is supportive of greed. And actually, we see the fear and greed index that is put up by CNN Business at 91 of a total 100. That means we have really, people are blind, therefore greed. There's a German saying that greed eats your brain. That I don't know if it's an English thing to say, but that's what they say in German. And that is really what we're seeing here. Also, the put call ratios at is lowest all year, if not even lower. That means that many market participants are not securing themselves to the downside of the market by any means. They don't mind. They just say, all right, it's fine. We don't need it. The market's going up anyway. And there's also, I'm not sure if I can find it right now, but there is JP Morgan is also going all in on their trades. They're all in there. They have, wait, was it here? They have closed their gold trades. They're going all in on the stock market, and this is just crazy. With all due respect, because I mean, even if that trade deal happened, yeah, we are still not in positive territory. So see this, for example, we have a record high discrepancy between corporate confidence and consumer confidence. And oh, where are we? Very close to what we've seen in 2000. And this was when we had a very big recession, the new market bubble, the dot-com bubble. So that is definitely something that is real, ladies and gentlemen, and things are not doing positive. I wouldn't want to be caught up in here it is. JP Morgan goes full risk on, remains overnight in equities, underweight in bonds, and unwinding its gold hedge. Based on signals of a cyclical recovery, easing geopolitical tensions, synchronized monetary easing, and defensive investor positioning across asset classes. Yeah, so they said, let's go for it. And that's, yes, it's a typical word is melt up of what we're seeing here. Obviously, nobody really knows if that is the case. But look, the news around everything that we're seeing, in my opinion, is alarming. It is not supportive of investing, if you ask me personally. So let's see where we're going to go from here. But the situation, in my opinion, is quite, not positive. And we also see that there is new news now that came out over newswires, and Kudlow saying that there will be tariff concessions if there is a phase one deal. But really there is no details, and like I said, there's fierce internal opposition about it. So, and there's definitely not going to be the way the Chinese want it, that the US keep rolling back these tariffs, and so is this a dead end to the trade deal? Well, we'll find out. Donald Trump is obviously under huge political pressure here. And it's not just the problem is that he's facing also problems domestically. So there is a diminishing electorate support in the U.S. as these tariffs are taking more and more toll on businesses in the U.S. So the problem is that the Democrats, they will use that against Donald Trump in the election. They would say, look, this president is willing to make you suffer for his personal agenda. So that is the next question. Can he really continue to be tough on China? Will the American people understand and support him? Or will he lose it all, like China and the election then? So it's a very, very tricky situation for him, and not the very best one. So we will see how things continue from here. But it's not so positive. Looking at other markets, what we're seeing yesterday was also, for example, let me pull it up here. We had the Bank of England, and the Bank of England had, where is it here, monetary policy. They came actually out with being quite, they had two dissidents. They had two members of the MPC, the Monetary Policy Committee, that wanted to cut rates already. And one of them was a hawk before, so someone who was usually for increasing interest rates turned over to decreasing interest rate, and we saw that the pound actually pierced the 128 level, and that's exactly what I was expecting yesterday, and what I had mentioned in my morning call, that could be a sub 128 trade, and that it worked out well. And let's see how we continue from here. We'll have to do more now with the election and how things continue in the UK, but definitely we see that the Bank of England is yet another central bank that has shifted to dovish for the lack of what else can they do? It's really not looking well. And the rest of the current the indices, we see that the German DAX also hit yesterday to the downside, following the US indices. Wait, here we go. A little bit. It's still okay, but after yesterday we had Juncker from the EU saying that he's certain that no auto tariffs on EU cars will be applied, and that is also like supportive of what Donald Trump, that the Donald Trump administration is no longer trying to pressure tariffs on the European Union. Probably, as I said, the car makers agreed to build factories in the US. But is that enough? Is that enough? And then I want to like talk about here this chart. The German industry slump deepens, defying any hopes for a quick rebound of the German economy. After promising new orders data, that was the day before, remember? Industrial output was down an annual 4.3% at the end of Q3, when the country probably sank into a technical recession. So that is the reality of Germany, ladies and gentlemen. It is negative. And that's what I'm trying to say, is that even if that trade deal happened, like how is that miraculously solving every issue? How is that getting the German economy back on track? How is that getting all the problems between the corporate and the consumer confidence back on track, right? The companies or the CEOs in the companies know and see that things are doing bad, and these things don't just go back by the flip of a switch. So that's why I am very, very cautious, and I'm rather expectant of a bit of a setback, because also if JP Morgan goes all in, the put call ratio is like giving us, so nobody's hedging against the downside. If everyone is getting into one side, like what happens usually? Well, remember Bitcoin at the end of 17? I'm not saying this is going to happen, but I'm saying the signs that this could happen are very much here. So in the currency complex, what we see is that, for example, the Australian dollar was one of the better ones taking advantage of it, but now rolling back again. So the optimism of a deal really happening between China and the US is fading out, and it's taking its toll. So what we probably see is that, euro, here we have euro dollar, that the dollar is getting stronger again. The oceanic currencies like the Australian dollar, the Kiwi getting lower. We can see the euro here yesterday also dropped lower, 110.50 now, after we ran below that 110.80. And that was also a tricky trade yesterday. Remember in the morning when I told you it looks like we broke through and we see no further downside, and then came the news that China said, hey, we're willing to negotiate the tariffs, and then everything turned in an instant and went back to risk on mode. But then there's opposition in the White House, boom, and the initial direction continued. And that's why you gotta stay strong. You gotta be firm in your trading if you have a hypothesis. So that's why it's so important to formulate your trade before you do it. What am I trying to trade? Why am I trying to trade it? Where do I want to enter the trade? Where do I want to exit the trade when I lose? Where do I want to exit the trade when I win? So these questions, you should always ask yourself these questions and have answers for them before you enter a trade, if you ask me at least. And last but not least, let's also have a look at gold, because that was the same tricky kind of trade yesterday. When the market thought, oh, it's not going so well, there is opposition between US and China, and then there came the news of China that, hey, we are going to roll back, boom, and we dropped. And gold now, in my opinion, has a quite good recovery chance from where we are if the US doesn't agree to these tariffs. And look, I also talked about that gold can very easily drop to that 1460 level. What did we see yesterday? Exactly that. So really, markets do have some patterns to it. I'm not saying that you're always able to see what is going to happen for sure, but there are probabilities. We're trading the odds. So listen to the story of the market. This is what I'm trying to inspire you to do with my daily morning calls here. Not so you follow my opinion, but that you see that how things work with each other, and that you start to synthesize this information for yourself and make your own trading decisions. Here we have oil. Well, what happens if we get closer to an economic crisis or no agreement between US and China? Then actually oil has little reason to move upwards, because then the demand for oil and the necessity for oil consumption gets lower. And that's why we could see yesterday, we traded up to the 58, similar like yesterday, and that resistance at the 57 level once more held. So that is also pretty much a confirmation. And last but not least, speaking about Bitcoin here, what we see is that Bitcoin is trading towards the lower end of its trading range. Yesterday, we even saw the 9,000 be tested. It's not looking all too positive at the moment. It's not very negative, but it's not the little bit of positivity from a few days before is now a little bit of negativity a few days later. We need to see significant levels broken to really get better of an idea of where things are going from here. And looking at the calendar today, what we're seeing today is Friday. Import exports out of China did. Wait, maybe I need to reload this. Sorry, I have a little bit of a flu or cold, or what you call it in English. So don't get irritated by my voice. Der Wirtschaftskalender, that's the German word for economic calendar. So here we go. Friday, November the 8th. Here we go. So trade balance was positive, obviously. Imports down, exports also down, but less down than before. So those are better development, but is this enough? No. Look, the biggest story remains very clearly of what the White House will respond and how that trade war story will unfold. Make no mistake, that is the single most important thing here that we can direct our attention to. So that is my overview of the markets this morning. As always, thank you very much for listening in. I wish you a great, successful trading day, and I'll be back here on Monday morning. Bye-bye.